There is a lot of concern now about a growth scare. Are you scared?
No, it just doesn't feel good. And I wish the Fed had started cutting interest rates earlier so we wouldn't be here today. But I think the economy is going to hang tough. I mean, for me, the key is jobs, and we're still creating a lot of jobs. I know the number on Friday was disappointing, 114,000 jobs, but that was affected by the hurricane and other temporary factors. I think the underlying rate of job growth monthly is about 150K. That's pretty good and good enough to ensure that the economy continues to move forward, stay out of recession. But having said that, it is really critical for the Fed to get moving here. And once they do start cutting interest rates, I suspect at the September meeting, they cut aggressively and get rates back down to something that's more consistent with the equilibrium rate, that rate which is consistent with policy neither supporting or restraining growth. We're a long way from that. They got a lot of work to do.
We've been trying to gauge the impact that this may have politically in the midst of an election cycle here, Mark. And I wonder, with shades of 1987, with the idea that this market downturn could in fact represent a slowing economy, if not a recession, the extent to which that could hang over the Biden administration and the sort of Democratic incumbency overall as Kamala Harris tries to clear out her own path on the economy. This remains her weak spot, along with the border, in all the polls that we're running here at Bloomberg and what we've seen across the country. What does she have to expect this fall when people prepare to vote?
Well, Joe, if I'm right about the economy avoiding a recession and we continue to create jobs, unemployment hangs around 4%, I think that should be enough to convince people ultimately that the economy is fine. Now, interestingly, ironically, with today's market sell-off, we did see mortgage rates come down. And for lots of folks, mortgage rates matter a lot more than stock prices. We are seeing, other indicators that, might work in her favor. I mean, the lower interest rates is certainly one of them. Lower oil prices is another. So gasoline prices before all this was $3.50. It seems like it's going to be heading south closer to $3. And so that would also be a very positive development for her. And here's the other thing, Joe. With these events, I think it's now crystal clear that the Fed has to cut rates and has to cut rates aggressively. Before these events, it wasn't so clear, and maybe the Fed wasn't going to cut rates, before the election. So the irony here in all of this might be that this works in Kamala Harris's favor as opposed to being a problem for her.
Well, to that point, Mark, there has been a lot of talk on the Republican side that a cut in September before the election would be something politically to advantage the Democrat. But wouldn't a cut, especially if it's a larger one, say 50 basis points, actually signal some degree of panic about the economy, that perhaps it's turning and that could be a bad thing for the incumbent?
Well, I think if the Fed cut in a meeting between now and the scheduled September meeting, maybe that would be kind of, what do they know that we don't know, and should we be concerned about that? But at this point, I think, there's a strong case to be made that they should be normalizing rates a lot more quickly than I think they had in mind before. And so a 50 basis point cut, now that's already embedded in market expectations. I don't think that's going to be viewed as, kind of a panic cutting. I think it's going to be viewed as, hey, the Fed made a misjudgment here, made a mistake, has to catch up, and they got to cut rates more quickly to catch up.